Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. Traders, in our weekend webinars, as you know, we like to take a larger or bird's eye view of these markets, stand back, rise above them, and see what the path is. Are we bullish? Are we bearish overall? And that is what I like to use the weekends for. I get to study the longer term charts. Traders, what I think about that is this. Oh boy, what a difference a day can make. 2 days ago, I did a video on Thursday night for Friday's trading and said the markets are set up to rally. The news that's coming out Friday morning should be bullish based upon the technical setup I've shown you. And to be honest, traders, that was a very strong looking technical setup. What happened? The markets got cremated, but they went through levels that they should have never gone through. They've pierced certain Omni averages that the market almost never pierces. It's the Dow Jones Transportation Average has dropped down through a parallel channel that it's been in since March of 09. And I have to say, indices look sickly at these levels, very sickly. And I am beginning to worry, traders. Look, Diamond Jack finally got his wishes. Not one, not two, but 3 red arrows on my board. Traders, I'm going to show you some charts in a couple of moments that I think are going to scare you because they scared me when I did the analysis. So we were absolutely wrong with our call on Thursday night for Friday, although in the S&P we were smart enough to reverse at a certain point and catch some points back on the downside. But the call initially was absolutely wiped out by the news that came out. So maybe not every bit of news comes out in the charts first, but most of the technicals come out in the charts first. All right, traders, this video is being filmed on June 5th. It's the weekend webinar. It gives you a couple of days for you to take a look at the charts yourselves before the markets open up on Sunday night into Monday. Traders, futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for every trading account. Be careful out there. If you do not have risk capital, don't play this game. But I can say this. The markets are looking really bad here, traders. I have a chart to show you. In fact, I have 3 or 4 that, they really, really make me upset. In fact, I think after the chart segment, we're going to have to talk about upside, downside. We're going to have to talk about whether we're sellers of rallies or buyers of dips. And I think these charts will explain why we are going to become sellers of rallies. Traders, with no further ado, let's look at the charts. Okay, traders, the first chart you are looking at is the leader of U.S. indices, the Dow Jones Transportation Average. This is the very same chart I showed you in Thursday night's video. And what I showed you was that we had a couple of things going on. First of all, this huge parallel channel that we've been in since March of 09. We were above it. In fact, we were right here on Thursday night, and we were inside of what looked to be a channel. And we assumed, because news was coming out and the market got itself above an Omni average and above the parallel channel, that this was just a channel and we'd work higher and finally get out of this mess. We held the secondary Omni average each time we hit it. That's when we rallied into Thursday's night session, and it looked like Friday would be an up day. Boy, what a difference a day can make, because what happened on Friday, it went right up to the Omni average, turned around and spiked all the way down to the lower secondary Omni average, piercing what was our huge parallel channel and breaking down out of that little parallel channel I just pointed out to you. I know this is slightly difficult to see, but this turns out to now be a bear flag. We are below OTAPMA. We are about to break the Omni average, or the secondary Omni average, and we have broken through the major parallel channel. Let me blow this chart up for you now, traders. I want to concentrate on this spot right here and show you what's going on. Okay, traders, we are now looking at the very same chart, the leader, the Dow Jones Transportation Average daily bar. Once again, these dotted red lines represent that huge parallel channel. Clearly, you can see we broke down from that channel. We're all the way down here. But what was really disturbing was that we got below the Omni average right here and broke hard. So what we thought was simply a parallel channel that we were inside of the larger parallel channel. Turns out to be a bear flag. Now we are sitting in a bear flag. We broke down through it. We are about to pierce the secondary Omni average below the major parallel channel. That's a very sickly looking market, traders. Not only is that a bear flag, but all the indicators are pointing down in just about every indice I did homework on this weekend, including foreign indices. The leader says we're going down. This whole thing right here is a big bear flag. In fact, you can probably count this retarded move that we seen in last month. We had that 1,000 point drop, spike down. That's probably going to be viewed in history as another bear flag. So it's probably bear flag 1, bear flag 2. We are heading down, traders. I kid you not. What a difference a day can make, yes. And now we are officially becoming sellers of rallies. We no longer have an argument for this market on the upside. Our argument now is going to have to be for the downside, sell the rallies until we get back above the Omni averages and back into that parallel channel. That's one chart, traders. So now you've seen the transportation average. Same chart, of course. We had the larger version, the bird's eye view, and this blown up version to show you the bear flag. Let me take you through a couple of other indices now. You ready? Okay, traders, we are now looking at the E-mini S&P. This is the one that all of us jump in and out of, right? This is the one we look at the transportation average, decide what to do, and play this bad boy. Well, look at the bear flag that has been formed. We've broken down lower than the bottom of the bear flag. We are now through the Omni secondary average. This looks bearish. Its indicators look bearish. Its leader looks bearish. This market is bearish. We are now officially sellers of rallies. Look at that bear flag, traders. You cannot deny what it is. And I think we're going to just morph into another bear flag and then another, and we are on our way back down. We are officially in a bear market. Let's look at another chart here, traders. Okay, traders, one of our leaders, the NASDAQ, has also put in a very nasty bear flag. Yes, it's still in the bear flag, but probably not after Monday because we are likely going to break pretty hard out of that bear flag. Traders, the high on Friday before the big drop was exactly even with the top of Otapma. Boom, we hit the high, it hit Otapma, broke down to the bottom of the bear flag, and I think this bear flag gets pierced and we move on lower. So, not looking good, traders. The indices look very, very sickly here. Let's look at one more chart. Okay, traders, another one of the leaders, and this one has really stepped up into its leadership role ever since probably August, September of 2009. This is the mini Russell 2000. It has really, really stepped into a leadership position. This has a big bear flag, just like the NASDAQ failed right at Otapma, but all the highs of this flag failed at Otapma. Each time the flag went up or the market went up to test the flag, Otapma was there to knock it back down. This time it went all the way down here, settled right down here, through the bear flag. First one to really pierce both averages and the flag. The leader, or one of the leaders, but this one really, really has stepped up its leadership qualities here, is pointing towards the downside. Its indicators are pointing towards the downside, and I think we're in some trouble, traders. So get ready to become a seller of rallies, and let's start looking at this as an official bear market. Probably 1 or 2 days more for absolute confirmation, but so far, I think we have to prepare for it because that's what looks like is coming technically. Traders, pull your own charts, do your own homework, find these bear flags because when you see them and you see the end result from most bear flags, you know what the likely end result will be in the indices in the near term. So, traders, you've seen those charts. I mean, I'm afraid of this market now. What else can we say about it except for it is bearish. That's that. That's a bearish look. All those charts are pointing towards the downside. So our bird's eye view from this point forward is that we need to be sellers of rallies unless something insane happens that buoys our markets and gets us back above those key levels I just presented to you in the chart segment. So do your homework geared upon selling rallies going forward. That doesn't mean you step in and go short the market the moment the market opens, but what it does mean is you do your homework based upon, let's look for good sell areas to get in because it seems to pull back on the big moves lately. So the charts look like we've turned the stone and we're starting to be a bear market. Bear flags usually repeat themselves 2 or 3 times in a row. I think we're going to see 3. I think this one's going to start to go. So be careful out there. Again, do your homework, traders. This is my presentation to you. This is video 593, baby. Yeah. And in video 593, I am saddened to do something and say something, but all I could think of when I look at don't fall in love with the downside on my board is... I have to wipe that off my board. I am so sad to do this because I was so hoping for the economy that it would go higher. And instead, I find myself doing videos like the one I'm doing for you now. And I find myself having to wipe off, don't fall in love with the downside off my board. And in fact, if we stay in the patterns that I'm starting to notice here, I'm going to end up writing, don't fall in love with the upside on this board. And what that means is no matter what happens as it goes up, sell into it. I hope it doesn't amount to that, but it is starting to morph into a serious looking bear market here, traders. So listen to this. I'm sure many of you out there right now go, oh yeah, Oscar was bullish on Thursday, he's bearish on Saturday. I'm a day trader. We're day traders. Imagine a day trader going from bullish to bearish from one day to the next. That is what we do. I mean, we follow markets. If I couldn't follow these markets or morph with the markets as they morph, I'd be in the gutter right now looking for cans to turn in. So that is what a day trader does. And you have to be the same way if you're a day trader. It's okay to be bullish on one day and bearish on the next if you have a good technical reason. And everything that we do is always based on technical chart work. It's based on analysis. It's based on indicators. It's based on past performance, past moves that you've seen, formations that you've seen happen over and over again. That is the basis of technical analysis. Repetitive formations are the cornerstone to technical analysis, and those bear flags usually repeat themselves. Again, traders, do your own homework and make sure that your assessment is the same as mine, because I could be some nut off the corner here just making this stuff up, right? I don't want you to ever listen to anybody's advice without doing your own analysis first, because let's face it, in the end, when you hit that button and send off the order, no matter who you listened to, the decision was yours. Make sure it's a smart decision. All right, traders. So again, the weekend webinar presenting to you what looks to me like a new bear market has been confirmed. I would like to give it another day or two for absolute confirmation, but it looks like it's there already. All right, traders, so let's gear up for the downside and let's see what's going to happen. We're selling those rallies. That is for the S&P and the indices. I would imagine the euro currency is going to be in the same shape as the dollar continues to bull higher. All right, traders, that's about it. I'm going to study more on Sunday, and I'll come back to you Sunday evening with some trade recommendations, hopefully to take advantage of what I just showed you in the chart segment. Give us a call anytime, day or night, 702-629-4755. And come on down to our site, traders. It's www.livewithoscar.com. Jump into the chat rooms. Don't trade alone. Allow us to stay in those chat rooms with you and help you become a better analyst, which in turn should make you a better trader. All right, the last thing I want to remind you is this. Traders, the volatility is becoming extreme out there. The bonds rallied 2.5 handles on Friday. That means there's a lot of nervousness out there. There's a flight to quality going on. There is panic starting to brew. A stop is your best friend, and don't ever trade without them, especially in this environment. Put your stops in and put them in first. And try to keep your emotions out of this thing, because emotional decisions always turn out to be bad ones. Well, maybe not always, but many times, more often than not, turn out to be bad decisions. We do not trade the seat of our pants decisions. We plan a trade, and then we trade that plan. And that is how you approach these markets as a professional. All right, traders, I'll see you back at the site. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.